and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of Dave & Buster's Entertainment Inc., ticker symbol PLAY, play. The reason we're looking at Dave & Buster's today is because their stock price just recently hit its 52-week low. Currently, they are trading for $31.03 per share, and over the past year, their stock price is down 21%. Over 3 years, their stock price is down 19%. That's down about 7% compounded annually. Dave & Buster's stock price is still not back to where it was before the pandemic. They got all the way down to a low of about $7 per share. So from their COVID-19 pandemic lows in March of 2020, the business is up over 4 times. Since going public about 8 years ago, Dave & Buster's has returned about 7.5% compounded annually. So currently, Dave & Buster's is trading for about $1.50 over their 52-week low, which is down about $20 from their 52-week high. Currently, 13.5% of the company's shares outstanding are sold short. And Dave & Buster's is an established but kind of a smaller business. They have a market cap of about $1.5 billion. So for some more background about the business, Dave & Buster's Entertainment Inc. owns and operates 144 entertainment and dining establishments in the United States, where customers can eat, drink, play games, and watch televised sports. The Play division includes amusement, simulation, and video games, and accounts for more than half of the company's total revenues. Food and beverage account for the rest. About 1/3 of food and beverage revenue come from alcoholic drinks, with the rest coming from food and non-alcoholic beverages. The company operates all of its venues under the Dave & Buster's name. Dave & Buster's Entertainment Inc. was founded in 1982 and is headquartered in Coppell, Texas. So for our fundamental analysis today, we are going to be performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Dave & Buster's based off of their business fundamentals. So this analysis is still a work in progress, and it's an opportunity to learn in public. It's going to continue to evolve and improve over time. So with that said, let's get right into our analysis. Starting off with metric number 1, we want their average return on capital over the last 5 years to be above 14%. The reasons for this are that the average publicly listed business earns about a 7% return on capital, and over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns, and these underlying business returns are captured here by return on capital. So by looking for businesses that earn average returns on capital that are higher than 14%, we can build in some margin of safety for ourselves based off the overall quality of the business. So as we can see, prior to the COVID-19 pandemic, Dave & Buster's was earning above average returns on capital. Since then, their business really took a hit. In their fiscal 2021, they had negative returns on capital, although that has rebounded through fiscal 2022. Currently, in the last 12 months, the company is earning about a 7% return on capital. And averaged out, weighting in the impact from the COVID-19 pandemic, Dave & Buster's is earning about a 9.2% return on capital in a given year. While that is slightly better than average, that's going to be below that 14% mark we were looking for. So this is going to be an X to start off here on metric number 1. Metric number 2, here we're taking a high-level overview of the cash coming into the business. We want their revenues, net incomes, and free cash flows to have grown over the last 5 years. This metric is all or nothing in nature. If even one of these is down, this entire metric will be an X. So on their year-to-date metrics, Dave & Buster's has seen growth both in their revenues and their free cash flows. Again, their business was severely impacted by pandemic lockdowns, but they've rebounded quite well. While their fiscal year numbers look like they produced lower amounts of net income over this time frame, in their last 12 months, Dave & Buster's has produced $132 million of earnings. So we're actually going to give that to them. So over this time frame, up until today, they've seen revenue, earnings, and free cash flow growth. So this is going to be our first check here on metric number 2. Metric number 3 is going to be building off of the previous metric, but here we're taking a look at the business from the perspective of an individual shareholder in the company by looking at the company on a per share basis. So here we're looking for earnings per share growth over the last 5 years. As mentioned, Dave & Buster's has actually increased their earnings over the last 5 years up until today. However, over this time frame, we're still going to be seeing their earnings per share go down because they've diluted existing shareholders by about 17%. So unfortunately, a lot of this dilution came during 2020 and 2021. So while the company was trading for below what it currently trades at, really Dave & Buster's was doing this in an effort to try to raise money to weather the financial hit that their business took. And while it is understandable, we ideally don't want to see this as long-term shareholders in a business because when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. When a business issues new shares and dilutes existing shareholders, they're decreasing your ownership percentage in the business, which is ultimately going to decrease the percentage of the business's profits that you're going to be entitled to. So basically, they're spreading the same amount of profits over a larger share base. So on a per share basis, the shares that you hold in the business are going to give you a smaller amount of those earnings. So because of that dilution here, we're seeing lower earnings per share over the last 5 years. So this is going to be an X here on metric number 3. And so far, we are only 1 for 3 to start off. Metric number 4 is going to be very similar. Here we're looking for free cash flow per share growth over the last 5 years. Again, looking at the business on a per share basis, even with their shareholder dilution, Dave & Buster's has still grown their free cash flows faster than they've diluted existing shareholders. So their free cash flows have almost quadrupled over this time frame, even taking into account the impact that the COVID-19 pandemic had on the business. So this is a welcome sign to see here. This is a check on metric number 4, and we're back to even. Through 4 metrics, we are split with 2 checks and 2 X's. Another thing to note here is that over extended periods of time, a company's earnings and free cash flows are going to be close to one another, and that if you were to see huge discrepancies here over extended periods of time, 10 years plus, that those could potentially be signs of things like aggressive accounting or in even some cases, financial fraud. That's something you want to keep an eye out for any business. It doesn't look like we're seeing that here. Although this is a shorter time frame, these numbers have more or less gone up or down in tandem with one another. Next up for metric number 5, we want their net debt, which is long and short-term liabilities minus cash and short-term investments, to be below the amount of free cash flow that they've generated over the past 5 years. So this will help us get a sense for if the business is employing too much leverage in their business or not. At the end of fiscal 2022, Dave & Buster's had $1.7 billion in net debt, and that has actually increased. Currently, they have $2.8 billion of net debt, and over the past 5 years, they've only generated $286 million of free cash flow. So that is not a lot of free cash flow relative to the debt that they're employing in their business. So during the pandemic lockdown, Dave & Buster's not only had to raise a bunch of additional debt to fund their business, they also had to issue new shares and dilute shareholders by about a fifth. So it looks like the company is still trying to bounce back from that, and there's still a lot of work to do here to improve the health and posture of their balance sheet and their financial positioning overall. This is going to be an X here on metric number 5, as the business is too highly levered for our tastes. The reason we want to be cautious about overly levered businesses is that during economic downturns, it's these overly levered businesses that are going to be potentially at the highest risk of performing the most poorly because of the precarious nature of their financial position. That's not a great sign to see here. We'd want to see that Dave & Buster's is using their free cash flows and heavily prioritizing paying down this debt load. Finally, the big metric of them all, metric number 6, we want their average 5-year free cash flows relative to their total enterprise value to give us a yield above 5%. So if that's the case, then that'll give us a slight risk premium to the risk-free rate of the 10-year treasury and give us a reason to potentially be interested in the business. We're using total enterprise value here because it is a more realistic economic picture of the business overall than market cap is alone, because it takes into account both the business's market cap and their net debt position. Currently, Dave & Buster's has a $4.3 billion total enterprise value, and we learned that over the last 5 years, Dave & Buster's has produced $286 million of free cash flow. That means that in an average year, they're only producing $57 million of free cash flow. And so when we divide their $57 million of free cash flow by their $4.3 billion of total enterprise value, that is only going to give us an average free cash flow to enterprise value yield of about 1.3%. That is below what the risk-free rate is right now, and so this is going to be an X here on metric number 6. It is worth noting that over the last 12 months, Dave & Buster's has produced $164 million of free cash flow. So if we were to take their $164 million of their last 12 months of free cash flow and divide that by their $4.3 billion total enterprise value, that would give us a current free cash flow to enterprise value yield of 3.8%. So that is a little better than what they've done historically. But again, that's still just at about what that risk-free rate is right now. And so either way, this is going to be an X here on metric number 6. We also note by looking at their total enterprise value that the total enterprise value of the company has gone up recently. This was because back in June, Dave & Buster's completed its $835 million purchase of Plano, Texas-based Main Event Entertainment, Inc. They purchased that from Australia's Ardent Leisure Group and private investment firm Redbird Capital Partners. So that merger is now marrying Dave & Buster's locations in North America with Main Event's 50 centers in 17 U.S. states. So that is why we're seeing this increase in total enterprise value, as the debt to fund that acquisition was consolidated onto their balance sheet for the quarter ending in September. Then finally, here we're taking a look at Dave & Buster's dividend profile. Currently, Dave & Buster's does not pay out dividends, which is a good thing for a business trying to prioritize repaying down their debt. The company stopped paying dividends in fiscal 2020. So once the COVID pandemic hit, the company has been reprioritizing how they're using their cash flows, and that is likely a prudent capital allocation move from Dave & Buster's management here. They found themselves looking for liquidity during the pandemic, and the company was able to avoid bankruptcy, so it's good that they weren't paying out dividends to shareholders here, and now they're finding other ways to reprioritize using these cash flows. In summary, Dave & Buster's checks the box on 2 out of our 6 metrics. While they are earning above average returns on capital, they're not quite up to the metric we're looking for. They have seen revenue, earnings, and free cash flow growth over the past 5 years. However, because of a fair amount of shareholder dilution, we've seen their earnings per share go down over this time frame. They have managed to grow their free cash flows per share by growing their free cash flows at a rate faster than how they've diluted shareholders. Then, because the business both needed liquidity during the COVID-19 pandemic and because of the company's $835 million purchase of Main Event Entertainment, the company currently has a net debt position of about $2.8 billion, which is well above what their free cash flows are able to support currently. So we found out that the business is both overly levered in that regard, and currently both their average and their current free cash flow yields are not looking very attractive relative to the risk-free rate. Finally, we learned by looking at their dividend profile, although Dave & Buster's currently does not pay out dividends, that management has been reasonable with how they're allocating capital by cutting their dividend payments, reprioritizing paying down debt, and then actually making an acquisition here recently after the company experienced a strong rebound in demand post-pandemic lockdowns. Dave & Buster's looks like an interesting situation here as a very in-person focused business that is still rebounding from the impact of the COVID-19 pandemic. Keep in mind that this type of analysis is a holistic beginning understanding of Dave & Buster's as a business to help you understand if it's worth your time to dig in and learn more about the company. This analysis is not financial advice, and it is not a buy or sell recommendation of any security. Before considering any investment decision, please consult with the properly licensed and registered financial and legal professionals. As a value investor, you ultimately want to do your own homework to understand a business as if you owned 100% of it, and you can truly understand the essence of the business and understand all of the business's ins and outs of what's important and what's not as part of your consideration of looking at the business. If you're interested in learning more about Dave & Buster's, I would highly recommend diving into the company's 10Ks. You can read through those historically to get a deeper sense of the business and a deeper understanding of the company going forward. Those will outline both the history of the business, the risks the business currently faces, as well as potential opportunities that might lie ahead, and you'll get a better understanding of both management's integrity and their competence, especially when it comes to capital allocation decisions. So with that said, that's it for today's fundamental stock analysis of Dave & Buster's Entertainment, Inc., ticker symbol PLAY, play. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Dave & Buster's with me, and have a great day.